Welcome back. CG Power is the next management that we are speaking with. Stock's doing well. It's up about 6.5 odd percent. It got beaten very, very hard from the highs of about 800. Yesterday at one point was down to about, I think closed at about 574 after making even a lower low. I think 520 was the low yesterday. So it's a full 100 rupee recovery for CG Power coming in from that level. Third quarter numbers maybe slightly mixed, you can call it. But I think the focus firmly for CG remains on what they'll be able to do in FY26. Amar Kaul is Managing Director and CEO at CG Power. He's joining us to take those questions. Amar, good morning. Good to have you back on the program. Thank you very much for joining us. Let me go in reverse a little bit. Let me start with the outlook and then come back to individual segments and what's happening, because there's a lot to cover there as well. Especially because what we've seen in markets, many are focused on companies like yours, good promoters and stable kind of business. And of course, in all the right segments in that sense in the industrial space. So give us a sense, Amar, of what kind of growth you're looking at, both in terms of top line and margins for FY26.
So thanks, Vishal, for having me. As usual, enjoy the conversation. So, yes, the quarter has been good, and of course, not giving into the forward-looking how it looks like, but we are bullish about the opportunities that we have within the country as well as outside the country. And that's what we are actually riding on to make sure that we control what we can instead of worrying about, macroeconomic trends.
What does that mean, though? Will in FY25, fiscal FY25, what should we look at in terms of, say net profits? I have got some estimates here, but help us understand. And then FY26 as well.
So we'll keep improvising. As I said, we don't give forward-looking guidance on that. But if you remember last quarter when we spoke, I told you we'll bounce back because I was not worried about one-odd investments that we did. So we are almost there where I committed that we will be. And moving forward, important is, as I said, controlling what we can control is what we are looking at. So I think we'll definitely we'll continue to grow. And you have seen even different segments. If I go a little deeper into our industrial segment, power sector, even the market overall, the numbers don't look very good, but we are still able to grow in industrial sector as well, which has not been doing so well. Which means the market is still there. You just need to go and get your piece of the pie.
Got that. Talking about industrials, the street, Amar, is a bit disappointed by the margin performance in the industrial segments. Now, you're saying this is on account of a greater skew towards railways. So what percentage of your industrials business came from railways this quarter? What can you guide going ahead on the margin front? And you wanted to get to 15% margins on a consolidated basis. When do you think you'll be able to achieve that?
So, yes, two questions. One, of course, we don't give the full percentage of what railways is and what motors is. But what I can say is our commitment to the nation building for Indian Railways. We'll keep supporting Indian Railways more and more. Railways business is growing much faster, high double digits. Having said that, our motors business, out of which industrial portion, for a change, for last 3-4 quarters, if you see, it was going down. And this last quarter, we are actually positive, both on the profits as well as on the top line. So which is a positive sign that the market is available and we'll continue to get into that. So the skew may change a little bit here and there. And of course, as we are doing our go-to-market strategy to balance Indian Railways with the exports as well, to make sure over the period of next few quarters, we are able to take it close to 14 to 15% PBT that we have a commitment to. So we'll keep inching towards that direction.
Okay, all right. Hi, Amar. Good morning and good to see you, Ben. You're putting up, I think, capex of close to around 700 crores for the power transformers capacity. I think is likely to add close to around 45,000 units or thereabouts. Help us out with understanding a couple of details out here. What would the asset turn be and how do you fund this?
It's a combination. So two things. One, this facility that we need is basis the power demand that you have in the country as well as for exports. Today, if you see our order backlog is almost for next 18 months, we are done with that. And we still see inquiries floating around. So it's a great opportunity for nation building as well as for exports. So that's why this investment will go in. Location, etc. We are in the process of hopefully in the next 30 days or so, we should be finalized where we're going to make this investment in. That's number one. Number two is also in terms of funding. One, of course, there are a combination of internal accruals. And of course, as you know, for QIP, we at some point will be raising more funds to make sure we have the surplus cash available whenever we have these opportunities of investment, whether it's expansion or any of the potential acquisition.
Okay, got that. The other one where you can provide us with some detail is this the OSAT business which you're setting up. Is everything on track? When will this be commissioned?
So yeah, absolutely, Prashant. That's on track. So OSAT, we had it in two phases. One is the mini factory and the main factory. So the mini factory work is already in progress. It is 100% on track. FY26 is when the production will start there, and that's going on that. And FY27 will be when the main factory, the big factory, will start also. So machines, equipment getting ordered, the management team is in place, the operators, 2 engineers, they are getting trained in the global factories of semiconductors so that they get hands-on experience the moment we start. So the complete project is in control.
You have tie-ups in place for technology, etc.?
Yeah. So I think we had a joint venture with primarily Renesas and Star.
Right.
And so we are using that combination, so working together on that.
I got that. So 26 is the smaller one, and the big full thing comes up on stream in FY27.
That's right.
And in terms of the overall sort of revenue opportunity from there, as we get closer to commissioning, do you have a better sense of what that could be?
I think hopefully probably in one or two quarters we'll have a better sense of that, but it's as per the plan, and I'm sure you would have picked up from we shook hands with the government as well, central government, for partnering together, so we get the support from the government as well. So yes, we'll have a better sense in next 1 or 2 quarters.
What about inorganic growth? Should we hear something from you before the end of this fiscal? That's when you join us next for your Q4 numbers. You're on the lookout, so I ask you.
So that's always ongoing inorganic. So the pipeline of candidates that you can potentially look at, of course, it's not just go around and shop. So it has to have the right fit and complement to what we are doing around the work that we are doing. So I would not commit that next fiscal or something, but yes, when it comes, you'll be the first ones to know about it.
Yeah, we are looking forward to that, and hopefully the fit is right, for you. So we'll wait by for that. But always a pleasure talking to you, Amar. Thanks a lot for joining in, giving us a sense about how demand is panning out and how you see the business shaping up as well.